In this video, I show you how you trade the best supply and demand zones, how you find them, and I have some step-by-step trade studies to help you find the perfect entry every single time. Before we take a look at the trades, let's first understand what supply and demand zones are. And when we talk about bullish zones, there are two types. We call them drop-base rally, because we are coming here from a downtrend. We have a little bit of a base here, a sideways move, and then the market is accelerating higher. So those are essentially turning points. The other type is the rally-base rally. So we're coming from an uptrend, the market is pausing here briefly and then shooting higher. So this is a continuation type of supply and demand zone. But what makes those zones great zones? And we are using a few zone qualifiers that help us identify the perfect zones every single time. The first zone qualifier is that you want to have a narrow consolidation. So after the initial drop, you want to see that the momentum is dying down. You want to see indecision candles, very small candles, preferably inside candles. And that is showing us the indecision here, the market is pausing. The stronger the breakaway from this little consolidation, the better the zone is. Same here. We have narrow consolidation. You can see that after the initial trend push, the market is moving sideways. It doesn't pull back a lot, that's important. You want to have small indecision candles, preferably inside candles, and then an explosive breakaway. Here you can see we have two very, very strong candles breaking out of this zone. So we know now that at this zone there's a lot of buying interest. And we can use that in our trading going forward and observe when the price is coming back to this zone the next time to look for great trading opportunities. I will show you in a moment how you find great trades with this. The same is true for bearish supply and demand zones. We have our trend continuation zone, which we call a drop-based drop. So we have the drop here, the initial trend push, the base is the small consolidation, and then the next drop. And we also have a reversal bearish pattern, which is called rally-based drop. So we're coming from a rally, the market is pausing here briefly and then dropping into the new downtrend. We also have the zone qualifiers, and they are the same as for the bullish ones. We want to see a narrow consolidation. So after the initial trend push, we have inside candles. You ideally don't want to see the market pulling back and pushing against the downtrend a lot. So small inside candles going sideways, and then the explosive breakaway. You want to see a very, very strong push here away from this zone. And this is what makes this zone a great zone, because it shows us that there's a lot of selling interest in this zone. Same here on the right side. We're coming from an uptrend. We have the indecision candle. The market is pausing here briefly. We only have a small doji, and then we have the explosive breakaway. You can see we have 3, 4, 5 candles of extreme selling suddenly emerge in the market. And this doesn't happen just by accident. There's a lot of selling here in the market that is suddenly coming in, and the buying interest is completely vanishing. And this is what makes this a great supply zone, and we want to observe the price coming into the zone the next time to time our trades. If you like this way of trading, make sure to check out my ultimate trading program. It's a trading course where I summarized my 16 years of trading experience into a few hours worth of video content. But there's so much more than just videos. You receive support from me 7 days a week. Every day, when you have a question, you can reach out, ask me questions, and I will respond to you 7 days a week. The trading program here consists of a trading course. There are over 80 new videos that I've never shared anywhere else before. The mentoring part is included. We have regular live webinars, and you will also be part of a lively community of traders from all around the world. I'm not using other teachers, I'm not using other mentors. You will be able to interact with me always directly. You learn my day trading strategies, my swing trading strategies, and you can apply to all the different time frames. Whether you are a completely new trader or you already have some experience, the course will help you make the step to the next level. The course in this program helps to build up your trading knowledge step by step. Here's a rough outline of the course, and as I said, there are over 80 brand new videos, so there's a lot for you to learn, and you will learn my actual trading strategies. I have dozens and dozens of trade examples for you. I show you how to backtest it. I give you my exact price action entry rules, and I'll show you exactly how to trade and how to prepare your charts. We also currently have a discount running, so make sure to check the link in the video description. And now let's get back to the video. So let's take a look at our first trade example step by step. We're starting on a higher time frame, and here we have a drop-based rally. We're coming from a little bit of a down push, more or less in a range. We have here the base, small inside candles, and then the rally. The explosive breakaway is the key. You have one breakaway candle, then an inside candle, and then the second huge candle. And when you're doing your scanning, this should be very, very easy to spot on your charts. You simply have to look for the largest candles on your chart, and you want to see, is there a small consolidation before that? And then you can draw your zones around that. You want to draw your zones ideally around the last consolidation before the breakaway candle. What we then do is, still on the higher time frame, we keep observing the price and we wait for the price to get back to the zone. We don't automatically go long when the market is hitting the zone, as I will show you. When the price is hitting the higher time frame zone, we are now on the lower time frame. And here we want to look for additional price patterns. I'm not a big fan of trading those zones blindly. Some traders may have a limit buy order at the zone and they automatically go long when the price is hitting the zone. I don't think this is the best approach. I want to see more confirmation. I want to see additional price clues. So I'm waiting for something else, a price pattern or anything else that helps me. Here, for example, we have a pennant pattern. After the strong drop into the zone, we see the pennant. The market is dying down here. The selling interest is leaving the market and the market is contracting. Then we have the pennant breakout, and that's where I would get in. This is the breakout candle. Your stop loss could be placed here just underneath the pennant top line, and you will get a 3-to-1 reward to risk ratio if you target the middle zone or the middle line of this lower time frame drop-based drop zone that we are finding here in this huge candle. This could be your first target where you scale out, or you could use this as your ultimate target. And you can see afterwards the market is shooting higher, almost hit the zone here very, very quickly, but there was a little bit of a pullback. The pullback wasn't too deep. It's never challenging any trend structures. So you have the green light to stay in your trade, and then the market is hitting the target. Another example, again starting on a higher time frame. Here we have a rally-based rally pattern. We're coming from a rally. The market has 2 very small inside candles and then an explosive breakaway sequence. 3 candles shooting higher very, very strongly. So we draw our zone and then we wait for the price to get here again. We are now on a lower time frame and the market dropped into the zone initially without leaving any clues. There's no pattern immediately. So I wouldn't take the first entry here, or I wouldn't take the entry when the market is hitting the zone. I want to keep observing the market and see if we get a better, more confirmation entry price. When the market hit the zone here, it shot up higher, and as it did, the market left a lower time frame rally-based rally zone. And this is what I'm going to use in my trading. When the market is coming back to the lower zone, that's where I want to get into the trade. And this is then the entry. The market is coming back into the lower time frame pattern here, into the lower time frame zone, and then it's accelerating away. I always want to see the market accelerate away from the lower time frame zone. Lower time frame supply and demand zones don't carry as much weight as higher time frame ones, so I want to see extra confirmation that the price is pulling away. You still get almost a 3-to-1 reward to risk ratio by targeting here this supply zone and having a very wide stop loss. You don't necessarily need to have such a wide stop loss. You could move your stop loss much further, but then there's a trade-off that your price will hit the stop much, much easier. So you can play it safer by choosing an approach like this. The market is then establishing a new nice uptrend here on the lower time frame. We keep making higher lows and the target is eventually hit here. Again, you could use this as your first target, scale out later, or close your trade fully, totally up to you. Now we have trade number 3. Here we have a rally-based drop. We are on the higher time frame. The market is coming from an uptrend. We have then inside candles, very small consolidation, a breakaway attempt here to the upside, which has failed. The market is pushed lower. And then here we have 2 huge explosive breakaway candles to the downside. And this is what makes this a very great supply zone to watch in the future. We stay on the higher time frame until the market is hitting the zone. So you can stay on your higher time frame the entire time until the market is hitting the zone. You could also play around with alerts, so you can put your alert around the zone to get notified. You don't have to watch your chart all the time. And then we go to the lower time frame. On the lower time frame, we can see that we have a double top here, but we also see that the market is still making higher lows. That's not a very bearish sign. It's still bullish on the lower time frame. So we want to wait until the market is breaking this area, which is doing here, and then it's retesting it. I made a lot of videos on my YouTube channel, and this is called a dirty retest. You can look it up on my YouTube channel. The dirty retest is very common, and you will see that the market is pushing very aggressively back into this area where it made the breakout. And then we want to wait for the next turnaround. Very aggressive traders will take the first candle here when the market is resuming into the trend direction that we are anticipating. Or if you're a little bit later, you're more conservative, you could wait for the market to clear the low. Of course, this will give you a worse reward to risk ratio by waiting more. But on the other hand, you now know that the market is already on the move and it has cleared the last swing low. For a target, you could look on the lower time frame and identify previous supply and demand areas, such as here. We have a small consolidation before the huge breakaway here, and that could be used as your target. The market is immediately breaking into the zone and overshooting it. Of course, this doesn't happen all the time, so you're probably much better off to at least scale out, if not completely close the trade, and then wait for your next great trading opportunity. Let's take a look at a final example together and do a complete chart analysis. So what we can see is that the market is in a downtrend here, and in the downtrend it leaves this little base drop zone. We draw our zone from the low of this candle where the initial push stopped to the top of this small inside candle. And this is then our base drop zone that we're using. The idea is that we want to trade with the trend. We clearly want to trade the downtrend because that's where the market is headed right now. And we want to see if the market is pushing back into the zone and then reversing lower. This is a very great approach because it allows you to trade with the trend. It allows you to also sit out the potential correction wave that might come here and then get into a new trend following trade very early on in this new possibly emerging downtrending wave. So on the higher time frame, we wait until the market is hitting the zone. We don't go to the lower time frame yet. We want to see the market push into the zone, and it seems to be doing it here. So at that point, we can go to a lower time frame and we want to observe the price action. So for now, the market just briefly pushed into this. At the same time, we see that the market is still making higher lows, so this is way too early. I like the chart a lot now because now we have a failed breakout on the lower time frame. So the market actually tried to break out of this resistance, but it failed and the market is rejected lower. So we could use this as our reference point going lower. We see even more pushes now, failed breakout attempts, lots of increased volatility that we're seeing here. More failed breakout attempts, so the buyers are trying to push higher, but the sellers are really strong here holding against it. And then we have a very good selling sequence. Now you can see here, in this last part, we only have bearish candles, whereas previously there was a lot of bullishness. It was mostly red, green, red, green. Here we are now only seeing red candles. And this could be used for your initial entry trigger, right? Your stop loss could be placed here above the last noise zone. Zooming out, you could say, okay, maybe we are targeting the lows here, but remember, we're going with the higher time frame big term trend. So we don't necessarily need to sell ourselves short. Of course, this will already give you a 3-to-1 reward to risk ratio, but we could probably get way more out of this because we're going with the higher time frame trend. So you could choose to scale out of your position if the market hits this and then trail your stop loss along the way. Let's see what happens. Market is moving lower very, very nicely. Not a lot of bullishness, and yeah, the market has broken through this, cleared the first level very easily, and because we're going with the higher time frame trend, we are looking at much more potential here for this trade to the downside.